What's up, guys? I don't know, Thomas. It's been a dog of a stock for me for years, so I don't know that, usually my policy with stocks like that is you just chalk it up to a mistake and forget it, just no need to keep putting good money after bad. I don't know. I think both IonQ and Rigetti are both good shorts. They're very different. I don't know that you have to pick one. Nobody's scared of Korea. Definitely not me. SMCI finally coming in closer to my price. QBTS, I want to add to my short here. D-Wave, one of 3 market makers for the New York Stock Exchange. Are they like a floor specialist? You mean like the not electronic maker, or it's mostly electronic now, and the market makers have mostly been replaced by quant funds. So the traditional floor specialist is kind of dead. And I don't know why you care about this. Just got to pick our stocks and forget about, unless that's what how you make your living, which is a very esoteric, little weird space. Anybody trying to make money on both sides of a trade, I would say, is a market maker. If you're bidding and ask at the same, if you're putting up bids and asks at the same time, you're a market maker. That's what I would say. Okay, maybe we get a meltdown here. Spies up, quantum's down. I like that. Let's check volume. IonQ, 3 million shares. Rigetti, 12 million shares. Let's look at most. Okay, what do we got today? Intel, Big Bear. This is number of shares traded. We got Intel, Big Bear, NVIDIA, Robinhood, Lucid, Tesla, Supermicro, the Trade Desk, which is down 32%, 31%. Wow, that's actually a bad read-through for a lot of things. That's bearish. Alibaba, Rigetti barely on the top 10. And remember, Rigetti has an advantage. It's got a very low stock price. So Palantir and Rigetti have traded the same amount, but Palantir is 10x the amount. Something called Exchange Tech, D-Wave just under Palantir and Rigetti. Neo, Cisco, who reported earnings. Some lithium company, Archer Aviation, IQIYI, that's a Chinese company. Reddit, who reported somewhat disappointing earnings. Tempest AI, the certain congresswoman's pick. Ford Recursion, Apple, Pagaya, and AMD. Those are the most active traders by shares. Let's look at gainers. Wow, Applovin, $511. Nobody told me about this. What happened to Applovin? Big earnings? Okay, let's look at Applovin after we review these. Big deal there. Dutch Bros, which we've highlighted here before. SBC Medical, don't know that one. Pagaya, we just mentioned. Aurora Innovation, don't know that one. DNOW, don't know that one. Iridium, Crocs, Jinzin, again, SBC Medical, jumping all over this page. Nova, Hims and Hers, another one we've been bullish on here, highlighting. Hymax, MGM, Lincoln, Ascendis, which we've also highlighted as bullish. I've bought that one before. Nova, Lincoln Electric, OneConnect, Corsair, Zeta, Siva, which we've looked at before here, Innodata, and Robinhood, which we've been bullish on as well. TELUS. All right, let's look at the losers. Trade Desk, as I mentioned, down 31%, huge fall. West Pharma, who makes a lot of different pharma equipment, is down. Aspen Aerogels, who I don't know very well. Fastly, Haynes, Pegasystems, Bally's, GXO Logistics, Mogu, Iradimed, PPF Energy, Trinet, Magnite, Datadog down. Did Datadog have bad earnings? I assume so. I think so, yes. It's hard to tell exactly. Zoetis, the animal pharma company on this list now. BTI, the British Tobacco Company. Kingsoft, and Arcutis and Hyatt. Okay, by value, Tesla's traded $6 billion. NVIDIA, $5 billion. Applovin has moved $3 billion. Markets have traded $2 billion on Robinhood. Then we got Apple, Meta, Alibaba, Microsoft, Reddit's had $1.5 billion. Palantir, same. Intel, Berkshire, Trade Desk's $1 billion traded. Amazon, Taiwan Semi, Coinbase, $900 million along with Datadog. AMD, Broadcom, Cisco, JP Morgan. Supermicro has traded $700 million worth today. I covered a small amount a minute ago. I'm going to reshort it here as it's popped a bit. Like I said, this is a lovely stock to trade. It's just like very volatile. It gives you multiple chances to get your money back if you're off by a little bit. The volatility just is fantastic. Okay, Supermicro, JP Morgan, Alphabet, Netflix and Tempest, which is traded $600 million as well. Reddit sort of caught up after getting really hurt last night. Shares are about, halfway back to flat after being down 8 or 10%, only down 4%. Robinhood, sort of holding its strength. Pretty huge quarter there, as we've sort of been bullish on that stock. BBAI continues to make a massacre of the shorts. IVVD starting to come to a reasonable price again. I haven't looked at PLX too closely. I'll try again. I want to look at Applovin right now. This has been like a very controversial company. Yeah, BBAI looks very dangerous. It feels like, maybe wait for that one to look like it's topping out. I don't know even what that looks like. All right, so Applovin, last I put in, the price was $385. Now it's $505. Just a few days. Unbelievable. Yeah, I mean, I updated this relatively recently. I just did one quarter. At $1.2 billion last quarter in revenue. Sort of like a Palantir type stock. 36 times revenue. Whew. Got the press release right here on the terminal. How'd they do? 1.372. So sequentially, they grew quite nicely. That's 1.4 billion in revenue. A lot of cash flow, actually. Maybe 24 times next year's sales. Not exactly cheap, but 20 times sales for SaaS is not that crazy. All right, let's take a closer look here. 1373, 320, 452 in COGS, so pretty high margin. Looks like it's very scalable. Earnings grew quite a lot there. Yeah, it's just like a lot like reminds me of Palantir. Like it's just very, the financials at least. I think the business is a little different, obviously, but financially, just like, can you really bet against this? It's very difficult to do so. Okay, Rigetti and IonQ back down again. Love to see it. You love to see it. Laundering money. Yeah, I don't know. That's a big accusation. People make stuff up, but when you have this kind of revenue growth, I mean, I do have to obviously look into the actual business and see what that is. I looked briefly and I didn't see anything that jumped out at me that was too crazy. I know there's some criticism that you can't beat that growth. Man, I posted a picture of me from prison and on Twitter, and like these people are just absolutely crazy on Twitter. Okay, so 2.1 billion cash flow. I mean, that's the big story here for Applovin. 2.1 billion in cash flow. That's really, I think, like for Palantir, people look at the sales number and they really don't get it. So 80 times cash flow for a company growing revenue 40%, that's crazy. So if your revenue grows 40%, how fast would your cash flow grow? Pop quiz for you guys. Revenue is, say, X, and it's going to be 1.4x. You have some kind of cost Y. Well, cash flow and earnings are the same thing. So you have some cost Y that's going to be something like I don't know, let's just say Y prime Y. Right? We don't know what Y prime is, but we presume it's going to be less than 1.4. Let's just make it Y prime times Y. That's a little easier to understand. We don't know what the rate of growth of costs is, but almost every business, the costs will grow less quickly than the revenue, right? So what will earnings or cash flow, which we'll call Z, what will be Z prime, if you will, of Z? It depends, obviously, on almost completely on the Y prime, right? But let's say it was cost grew 20%. Okay, so what would the earnings be? Well, if it was $1 billion, then it would be 1.4 billion here, 1.2 billion here. Well, let's say it's half as much. So this would be $500 million. Say that it looked like this, and then 1.2x on 0.5 is obviously, we could do that in our head, but we'll just put it down here for proof. 0.6. So 1.4 minus 0.6 is 0.8. So that guess was really good. In this circumstance, it was 60% cash flow growth. So the point is, 40% revenue growth, and they did 45% last quarter, resulted in 60% earnings growth. What if that happens 2 years in a row? Okay, so the cash flow is 2.1 billion, and you're talking about 60%. Let's do that times 2 years is 32 times cash flow. That's a lot more reasonable. That's why these growth stocks are so exciting. And you could have known this yesterday. Yesterday, it was not hard to figure this out. Yesterday, the stock was 380. That would have been 24 times earnings for maybe the fastest growing company on the stock market. So yeah, everyone's talking about the right things here: operating leverage, contribution margin, all that stuff. And you're getting this big boost. So a lot of people kind of just don't understand, Palantir's growing cash flow 100% year over year. So, these ultra high growth stocks, look, people want to take them down a peg. So you can investigate them, and maybe there's something there, maybe there isn't, but just on the basis of revenue and the basis of, earnings, you just have to see that. Look, one of the things I've also said over time, I hope you guys have picked up on, is anytime the second derivative of revenue growth is positive, that's a really special company, because almost every company, as you get bigger, your growth rate should slow down just because the laws of large numbers. When I noticed Google's growth rate accelerating in 2006, I just started my hedge fund. I was looking at Google, and the company was growing faster as it grew, which is really strange. That's happening with Palantir. That's happening with Applovin, a couple other companies. It shouldn't last too long, right? Otherwise, the company will grow to infinity. But when you see that happening, it means something pretty special is going on. And again, it says nothing about the actual business itself. We have to do deep dive into the business. We're assuming it's a normal company. We're assuming there's no fraud. We're assuming there's no chicanery. We're assuming there's not going to be some big sea change in buying patterns or something like that. Well, the rate of change is 44%. But the second derivative is the rate of change, which is positive. It's gone up. It's growing, check. It's growing faster than before. So it's accelerating. So in calculus, it's second derivative. Yeah, second derivative. So it's accelerating. And yeah, maybe there's something fishy going on with Applovin. I'm not saying there isn't. But, for now, the stock doesn't look that expensive if they continue on this path. And again, sometimes when you're debating whether or not a company is going to continue on a path, if they're actually growing faster every quarter, that's really a good sign that they're going to continue on that path. So ad revenue for them was the bulk of their business. Notice that the trade desk had a really bad quarter. So I don't know if they're taking share from them or if they even operate in the same business. I don't think they do. Applovin, I think, is all mobile. And then they have a games business, or an apps business, but I think that's mostly a games business. And the games business is the one growing really, really fast. It's almost doubling year over year. The apps business is flat. So the fact that ads are growing year over year, doubling, that's insane. That makes the cash flow story even better. Oh, they're selling the apps business. Interesting. And what are they? They're guiding to 1355 to 1385. And they probably beat that. Q1's almost always softer than Q4. Yeah, I don't know if they have a buyer or what they're doing there. But again, I'm not too current and fresh on this company. I just, know it's something people really like to look at. Yeah, look at that segment EBITDA margin, 78% EBITDA margin. How crazy is that? What business has 80% margins? Operating margins. That's a wild business right there. Never heard of that. No, NVIDIA doesn't have 85. NVIDIA doesn't have 85 operating margins. NVIDIA doesn't even have 85% gross margins. Yeah. No, look, I'm sure there's something weird about their product. We have to dissect their product, see what kind of value it adds to their customer. This is purely a financial analysis, no real product analysis at all. Yeah, Applovin was, I think, the best stock on NASDAQ last year, if I'm not mistaken. Number one or number two. All right, we got to ban this guy, adventure player. Nobody's bullish on ETH. I haven't looked at Coinbase. Yeah, no, there's a bunch of biosimilars coming out for Keytruda. Everybody's expecting that to happen. There's nobody that doesn't expect biosimilars to come out for Keytruda. I was just modeling what Amgen's benefit was going to be for Keytruda. ETH isn't exactly a meme coin. I get what you're saying, but that's a little unfair. Which does make you wonder if Bill Gates, Jamie Dimon, and Warren Buffett are all crypto skeptics. I'm not saying that means, wouldn't be, entering as a short? Yeah, I think Trump is a good short right now. It's popped a bit. Yeah, the subcutaneous antibodies have not really helped some of the other companies that have tried to extend their antibody franchises. It's just not been that useful. Well, game day, this guy is, I'm not saying Bill Gates has gotten everything right, but Microsoft is one of the biggest companies in the world. They've done a lot right. And he's also willing to change his mind, and he might change his mind about crypto years from now. So, but Buffett's sort of skeptical, and Jamie Dimon's kind of some people say JP Morgan is a tech company, kind of in a bank's clothes. Don't know aardvark. Anovis is a short. That drug doesn't work. It's like a meme stock that's been preying on retail people. Okay, I never looked at the trade desk before, so I'm looking forward to doing that because it's a fairly big software company. All right, it went up to 140, and now it was 80. Then it went to 140, or no, 120, and then it's back to 80. I don't think Perplexity or Robinhood have the domain knowledge. The search side, I think Perplexity is a really good competitor to Google. And Google has some financial stuff. They have patent stuff, right? They have a bunch of little things for the average person to use, but it's never going to enthrall, say, an attorney or a professional Wall Street trader. It'll be useful for the average Joe. That's great. And so they're going to compete with Google Finance, Yahoo Finance. Robinhood is a little closer, but even still, Robinhood is not catering to the institutions. I talked to Vlad briefly about that. Content scales too, right? Content does scale. It just has a limit. Mr. Beast content scales, right? Niche content scales less well. People will only pay so much for content. And to scale content, you need more people. So it's really not as scalable as software and software tools, where you build a tool, maybe 1 million people want to use the tool, and they'll pay a lot for it. But if you have, a newsletter, people aren't going to really want to pay for that. You might have to monetize through ads. You might get 50 cents a person. But if you make an options trading tool people really love, you can charge $1,000 a month and get 1 million people to use it. Doing that, Mr. Beast, Aiden Ross, those guys have become rich, doing that. That's great. Yeah, I saw Arvind, who I consider a friend, and Kamath, who I do not. Look, unless you've worked on Wall Street, you don't get it. That's all I'll say. You got to work on Wall Street to really understand what it's all about. But you can definitely build something for the masses. Yahoo Finance needs a better competitor. You can get some more data and some more specialized stuff. But the problem with Yahoo, Google thought this through too, right? And the problem with Google is you're going to need a team that will maintain and grow that product. And then they're also, what are you going to do about shopping? What are you going to do about law and patents? What are you going to do about, each little niche, Google Books, Google Scholar? All of these are products that Google kind of said, oh, let's do it. And then they're like, yeah, right? So it's just kind of sophisticated professional investors their workflow and their day job looks a little bit different. And I've been trying to sort of show you what that looks like. Is a platform for technology, or a software platform for advertising. So when you did grow, maybe they gave bad guidance or something, we'll see. I think that nobody's made any money making a platform for the masses. Wall Street is got trillions of dollars, and the masses don't really, it's so diffuse that the masses are not willing to really pay that much, but Citadel is willing to pay you hundreds of millions of dollars for software. Not many people are willing to pay to look up a stock quote. They expect that to be free, and it should be free. And we have that, right? Like you can look up a stock quote on our app, but like, when are you going to actually pay us? And the answer is, you'll pay us if you have $1 million portfolio, you know, but you know, it doesn't really make sense for you to pay us if you have a $5,000 portfolio that you check in on once a year, or a 401k or something, you know, just doesn't make sense. I like to keep in touch on the software industry, and I like to look at stocks that people ask me to look at. But in general, this doesn't help Godel that much. Although I look at the news on Godel and stuff like that, so I kind of show what the workflow looks like and how a professional might use a tool like this. Yeah, our company will definitely be worth more than Rigetti. I think we have more revenue than Rigetti already. Yeah, advertising to that audience is okay business. It's just not. I wouldn't call finance TradFi. That's like a very stupid thing to do. Crypto is just not that big yet. If you told anyone on Wall Street, you said TradFi to them, they'd be like, huh? TradFi? So what are you guys? The new Fi? Farcoin? Is that? I think I'll stick to TradFi. Everyone wants a shortcut. The reality is, like, to find good investments, you just have to look at massive amount of stocks, listen to massive amounts of conference calls, talk to massive amounts of people. It's just a lot of work. That's really the problem when you see bag holders. Like, the number one sign of a baggie is they have one stock and that's all they care about. That's the number one sign of a baggie. Because the biggest returners of last year, you didn't look at because you're lazy. And you should have looked at Applovin. I don't see why. I don't know Applovin. Yeah, on even in crypto, like looking at every crypto, finding the very best short, like Vine. Vine was hilarious, man. Jesus Christ, 6 cents. I was shorting this at 30 cents. Yeah, Bloomberg doesn't really build anything anymore. They mostly do DEI. They're very good at shipping DEI. That's their specialty. I thought Elon was going to pump our bags. When you mean position. Or investment. More bags. Yeah, I don't have an hourly rate. There's no hourly rate when you're an entrepreneur. You give everything to what you're building. Okay, so the trade desk did 740 in cash flow. Well, they actually spent 100 mil on whatever they were spending it on. So I'd just say 640. And cash flow is like 60 times earnings. I guess Wall Street just didn't like the. I thought I addressed that, Humphrey, like pretty extensively. Is there something I missed? Oh, that guidance is, I'm guessing, really bad. Well, are you asking if your content should focus on something, or that you should build actual software? I mean, I think software is great, you know. I think maybe like a hybrid approach could be interesting too. That's kind of what I'm doing. So, you know, it depends on your software skills for sure. Software is getting easier to make and maintain, but it's still not that easy to make and maintain. Some people are really good at making soup to nuts software. Like me, I just can't make nice front ends, for example. And so, like, I need a team. I mean, some of the smartest people in the world go to work at D.E. Shaw or Jane Street or Renaissance. So I wouldn't say the same thing about crypto. They're smart crypto people. 𝗤𝗢𝗡𝗢𝗏, Vitalik. Oh, my friend Kevin. He's super smart.